What is up, you guys? Welcome to another fantastic episode of the Explain It podcast. We are your hosts. I'm Stephen Hunt.
And I'm Ingryd Hernandez.
And we are so excited to have you here. We have a really awesome guest that will be joining us today, talking about one of the most exciting topics, truly, I think we've ever had on the show, which is insurance. Like, are you really even insured, bro? Do you even have insurance?
Is it that exciting?
It is exciting. It actually is very exciting. If you
Okay.
are a real estate investor, a lot of us are underinsured. We don't know really how insurance works. We just know we have to have it.
Yeah.
So a lot of us just end up finding insurance for our properties. How do we make sure we're actually protected? How do we make sure that all of our assets, like Ingryd and I both separately own, and we own some properties together, but 17 properties each, right?
I think I'm at 16 instead.
16.
I don't remember, actually. I have to go look
I'm gonna
at my
bump you up to
number.
17. I stopped
Okay.
counting, and
Yeah.
then I'm like, things come in, things go out. You know how it goes. But how do we know we're actually insured correctly? Because when you're buying your first rental property or your first two rental properties, sometimes you're just throwing a policy on there. You're just trying to get through it. You don't know what you don't know.
No.
But as you continue to build out that portfolio and you start to scale out, like what do you need to make sure you're protecting yourself?
Yeah. And I was talking to somebody who actually is like multimillionaire, has a lot of assets, and they had their insurance person review like their portfolio, and they were severely underinsured.
Oh, wow.
So like, especially when these are the things that are supposed to create wealth for you, it's like, can you afford to be underinsured? I mean, only really you can explain or take that into account. But anyway,
I mean, is it worth the risk, right? Fire, flood, and blood. That's what we say in property management. Fire, flood, and blood. Those are the emergencies that come up.
Okay.
I mean, I'll give you an example here in the property management business. Ingryd was here while this was all going down. We had somebody that was waving a gun, one of the neighbors, at one of the tenants that's in that property right now. So think about that landlord. Are they insured? What if something actually happened? What if now we diffuse that situation?
Yeah.
However,
Thank
what
God.
if something like that did happen, right? What if there was a huge liability on the property and that person wants to come back and sue you? What if the property does burn down? I have a property where the dryer vent was installed incorrectly. Listen to this. So this is in Phoenix, and we went live just in time for the Super Bowl, which I was really excited about. Beautiful house. And we actually had Rihanna's costume team staying there.
Rihanna.
Rihanna.
Like the singer.
Rihanna.
Oh.
Yeah. So she was performing at the Super Bowl.
Ella. Okay.
Yes. That's exactly how it goes.
Okay.
But we had her staying at the house, and we had just finished the project, and they were actually our first guests because she would be performing at the Super Bowl. So her costume team needed a place, and they were there for a week.
That's so dope.
The first day they go and do their laundry, and they had not done the laundry, the dryer vent correctly. And it started burning up, and it almost all caught on fire. And I'm like, could you imagine the headline of
like you don't want to be on the headline for that?
Ruined Rihanna's costumes.
Oh my God.
What kind of lawsuits would we be in for?
Yeah.
You know, what would happen in that situation?
Oh my
So
gosh.
anything can happen at any time, at any property. So how do we make sure that we're protecting ourselves? How do we make sure we're insured, that we're secured? What does that look like? You know?
Right on. Well, we're going to have an expert insurance guy who I've known for, I don't know, like 15 years or something.
Wow.
As long as Isla's been alive, because I've known him and his wife for that long.
That's
so
awesome.
That's kind of how I gauge how long our friendship's gone on. I'm like, how old is Isla? That's right. That's right. 15 years then. Yeah, for sure. Cool. Well, shall we bring him up?
Let's do it without further ado.
Hey, Chris Cahall.
Woo!
Taking you off, or you're on mute, Chris.
Yeah. Sorry, I was moving around before this.
Ah, right on. Well, we are happy to have you back. I know you've been our insurance guy on here before, so glad to have you back.
Yep.
Well, how's the insurance industry doing? I know it's had some challenges.
Yeah, catch us
lately.
up to speed. Tell us about insurance.
I mean, right now the insurance industry is completely volatile. It's really, really a tough market. I have had more cancels, non-renews, and just flat out denials in the past 6 to 7 months than I have in the last 13 years. So I've been doing this about 14 years, but it's just getting really, really tough out there.
Yeah. And then what would you say is a contributor a contributing factor for that toughness? Like, what's happening?
So everything's run by data now. I mean, there
Right.
isn't anything that isn't impacted by the attributes that you bring to the table, like your credit score, like your claims history, your bill pay, your driving record. All of that, even in home policies, is taken into consideration. And they're just, the carriers are just making sure that the people that they're bringing to the table are people that are actually going to take care of those properties.
Yeah. Well,
So,
and I'm curious about this because, I own a property in Texas and that insurance is redunculous.
yeah.
And then I
Yeah.
keep hearing about all these insurance prices being what I would feel is gouged out in Florida, or insurance just saying, nah, I'm out of here. We're not insuring in this state anymore. Like, that's a problem in Florida and in Texas.
Yeah.
Right.
So,
And it's happening. It's happening everywhere.
which is crazy. So, like, what are we to do? Like, as landlords, as folks who have these assets in those states, like how do
you underwrite these deals a specific way, and you're like, this is going to cash flow me. And as a beginning investor, right, somebody that's just getting into it, you might be making $200-300 a month. So if that premium goes up another $1,500 a year annually, I mean, shoot, you're chopping away.
Yeah.
Certainly. Yeah. I
Yeah.
mean, the best advice that I can say is take insurance into consideration. I mean, a couple of years ago, people weren't even considering changing over their insurance because they were concerned about that due on sale clause. And now things are changing, and carriers are becoming more aware of what's happening in the mortgage industry.
Yeah.
And so they're able to kind of adapt to how we're structuring these policies to make sure that they have those warm and fuzzies, and all of that, never gets called on.
Yeah.
But when you're looking at a property, you really have to think about, well, how far away is this from a fire department? Is the fire department a volunteer fire department? Is there a fire department at all? Is it a subscription paid fire department? Because insurers are very, very concerned in regards to wildfire, and it's a new score that a lot of insurers are looking at, and a big portion of that score is made up due to the proximity that your property is from someone that's going to respond in order to put that fire out. And right now, I mean, a huge portion of California is burning. I mean, we have a big
Yeah.
fire going on in Pine, Ingrid, where we like to go camping. I mean, there's a
Yeah.
huge fire going on there right now. So ultimately, there's just additional things that need to be considered when purchasing a property.
Oh,
Yeah.
absolutely. Now,
Yeah.
I assume when it comes to the fire side of things, that's going to be less in the metro city areas, right? Or is that do you think also affecting metro city areas? I could see something maybe like Ingrid has a property in Sedona. I could see those premiums going up because we got trees. There's things to burn down
Yeah.
versus the concrete jungle.
Yeah.
Yep, absolutely. That Sedona property is certainly one that is on the topic of a higher wildfire score. So it's certainly something
Wow.
that we have to take a look at.
Yeah.
Now, how drastic are you seeing these increases come out as,
So,
essentially?
so it could be anywhere from, $1,500 more, 2,000, 3,000 more, depending on
Wow.
the type of the home. If you have $1 million home and you're on the outskirts of town, which is exactly where everybody wants to be. I mean, if you're paying $1 million for a home, you don't want to be on top of your neighbors. You want to have a little bit of
Right.
land, a little bit of room to breathe, maybe to be able to expand on your property, put a larger garage, pool, that type of thing. Well, some of those properties, they're 15 miles away from a fire department, and it's really impacting the ability to write them financially or even get them insured at all.
Yeah. And a lot of mortgages require you to have insurance.
Oh, yeah.
So
Well, that was going to be my next follow-up
Uh-huh.
question to this too, was uh, it's different when it comes to creative finance.
Mhm.
And this is where it can be tricky for some people, because some people only want to focus on creative finance, and you're not getting a typical conventional loan obviously that way, so you're not having the requirements for the insurance. So some people will just get the bottom of the barrel, whatever they can get, if they
Mhm.
even get insurance. I've seen people not get insurance as
Mhm.
well when it comes to
Mhm.
doing creative finance, doing seller finance, whatever the case is.
Absolutely.
But with a lender requiring you, right? If I go get a DSCR loan or conventional loan or any kind of loan, they're going to require me to have that set up before we can even close. Like, it has to show up
Right.
on my closing documents
Mhm.
that I have that insurance. Are you seeing that that is even enough coverage? What the lenders are asking for? Is it too much coverage that the lenders are asking for? What does that look like?
Most of the lenders, they just want to make sure that that policy is a replacement cost policy, because ultimately, while you may be the buyer of the home or the owner on the deed, technically you really don't own that property until that note is paid. So
Mhm.
they want to make sure that you have those replacement cost terms, so that if there was an issue with the home and it was damaged a certain percentage, or smoke damaged, like that's a big thing when it comes to smaller fires in a home, that we have the ability to rebuild that home exactly the way that it is. So meaning, like, if you're in a neighborhood, well, we have to bring in more manpower. We have to bring in smaller machines. We have to make sure, you can't bring in those huge Caterpillar bulldozers to bulldoze everything. You have to take things out in smaller increments, because you have neighbors on all sides of you.
Mm.
Mhm.
So really, if an insurance agent can't find a insurance carrier, there's something called forced placing insurance, and that's never good.
Right.
At that point, those policies are super expensive.
Mm.
So you're looking at maybe 4,000, 5,000 a year, just because there wasn't an insurance carrier that would take on that risk.
Right. And this is a great transition to a question from the audience. So Dolly the Traveler,
Ooh.
question, I have a property in Cape Coral. I have to find an insurance, but nobody wants to insure us because it has a okay, I'm going to read between the lines. You have to replace the roof and it's a cost of $22,000. What I don't have right now. So, like, unfortunately, I think my recommendation is let the insurance force insurance on you.
Mm-hmm.
Like, that might be the most cost effective for you because you can't afford the minimum.
But I think that if you can take that into consideration too, let's take and I don't know your specific financial situation, Dolly, but I would also look at it from the perspective of, does a roofing company offer financing? There's a lot of roofing companies, because
Oh,
it's a
yeah.
big cost. They
Yeah.
offer financing. Does that financing cost less than what your increased premium is now going to be by getting the forced insurance?
Yeah.
Right? Weighing those two things out.
Yeah. That happened to me with a AC unit in Texas,
Mm.
Unexpected cost. Did I have the 12 grand it cost to replace it? No. So luckily, and we always preach this on the show, is please stay bankable. Keep your credit score solid,
Mm-hmm.
because that is what saved my behind, was going to get a zero interest business line of credit. Or it wasn't a business line of credit. It was just a
Line of credit,
construction
yeah.
loan, a line of credit. And
Yeah,
they're like,
a
yeah,
lot of these companies are going to
Yeah.
be partnered up with some sort of bank,
yeah,
right? That's gonna help them push all their deals through.
yeah. So that's our
Absolutely.
recommendation to you, Dolly. See if maybe you can get like a zero interest line of credit. Usually it's valid for a year or two. Maybe this property can provide you the income you can to then just pay that down. Or really, plan Z is see if the mortgage company will put a forced insurance policy on you.
Yeah.
Mm-hmm. Right on. Okay. If anybody else has questions, by the way, Chris is ready to answer them. We've had, if he's represented us for wrap deals, for subto deals, like and every single time
All
I'm
the
a
tricky
pain in the
stuff.
ass, by the way, because I'm like, Chris, I have another one. And he's so kind and patient, because I swear, like, I could just go look at the last email and say, what did I have to send you the last time? Okay,
Yeah.
let me send you. But anyway,
It's all good.
I mean,
It's all good. Yep. Well, I love talking to you. Both of you, it's always a joy. You both are easy to work with. There's no drama. fantastic. And you're always willing to answer my questions when it comes to real estate. When, I mean, I'm not an agent. I'm not a real estate agent. So I need to come to the professionals.
Yeah. Well, this guy is not very professional either. He doesn't have his license, but he owns a shit ton of real estate. So he can answer
It works.
questions.
I'm getting my license, guys.
Yeah.
You guys can take my word for granted pretty soon here.
We should say if you don't have your license by the end of the year, there's probably something you have to do, like maybe 100 pull-ups or something.
Oh, easy. Yeah.
Okay.
I'll have it done before October's done. That's easy.
There we go. Cool. So, Chris, as you mentioned, the industry is having some challenges right now. So is part of this also, and I don't think it's political, but asking the question about climate change. Like, is that climate change? Is that what you guys call it? Like, what do you call it? Like, it's getting hotter everywhere. And I can't believe we went that many months with over 100 degrees in Arizona. Like we just stopped that this past
Every
week.
year we break that record.
Yeah, for sure.
113 days, 113 days.
Wow.
Yeah, that's crazy.
Yeah. So I think that it absolutely has part to do with it. I mean, the occurrence of fires are happening more often. Occurrence of flood is happening more often. So, and torrential rains, hail. So all of these things are impact insurance rates, and insurance rates can't just change on a dime. So we can't say, well, we want to make a little bit more money this month. So we're going, instead of charging you $1 per $1,000 of what you're insured in, we're going to charge you $2. What has to happen is we have to justify to the Department of Insurance, and this is state specific, as to how we're going to increase rates. And it's every company. So there has to be some ammunition behind there to show, like, this is why we need to adjust what's happening within our company and how we're putting our pricing structure together. So things happen slowly in insurance. So in 2020, a lot of people weren't driving. A good amount of insurers gave refunds on that year for driving because people weren't on the road. 2021, 22, you had slowly steady increasing prices. And then middle of 22, things just really started to take off. In 23, everything was absolutely outrageous. Everything was double, triple what we paid in 2019. Now we're paying, double. So it takes a while for that cost from that the insurance companies are paying due to labor, material prices, fuel, wages, when all of those things happen on a dime, and it takes us a while in order to change those rates. And I don't think that there's going to be a decrease in rates for a little bit, because all these companies that have been absorbing those higher prices, they are now adjusting all of their rates in order to meet and become profitable again. And it'll take a while before we can say, okay, well, the prices of everything has come down. And so therefore we can now lessen the amount that we're charging for insurance, because our combined ratio is okay.
Yeah. This is interesting. And you came to my office today and you're like, Ingryd, did you see the Fed went down? Like, the Fed rate, they dropped the rates today. So I'm wondering how much of that plays into also, because obviously it plays into how people run their business.
Yeah.
And so I wonder, like, how does that play in? Like, if I'm going to start seeing rates go down and like inflation is coming down, I expect my insurance to come down too.
Totally.
Yeah.
Totally.
Yeah. Chris,
Yep.
I expect my insurance. Just kidding.
Now, I think some of it
my
also
insurance to come down too. I really do.
It's a strong expectation.
Yeah.
Yeah.
Now, another thing that I've heard as well is that there's been less funds allocated from a government perspective as well to clearing out brush, to maintaining the forests. There's a lot more population moving into a lot of these areas too, so compacting things more. So there's just been more risk, obviously more people, more density, more brush that's not being cleared out, and funds being allocated to that has been another huge thing when it comes to the fires and this kind of stuff happening. Now, hurricanes, there's nothing you can do about that.
Yeah.
I don't know.
Yeah.
That's you don't really allocate funds to prevent the hurricanes.
I mean, really, it comes down to maintain your property. You know, educate your neighbors in regards to maintaining their property. I mean, really, if you have a desert property and you have a bunch of tall grass, all you need is a piece of a chain link fence and an ATV, or even your vehicle. I mean, just to drag it through the property and make sure that that's cleared out.
Oh, I'm
So,
gonna hire some Cahall boys for that then.
Ooh,
Yeah,
right,
I know you got ATV. I'm sure they'd love to do that. I think
right.
about our property on 85051.
oh,
Where this grass will not die.
we're
So
trying.
it's
Doing the best we can with what
they
we
did a
got.
terrible installation originally. It wasn't us. And grass underneath the rocks. So it's crazy.
Yeah, there's a bunch of grass and weeds, and they never really cut them down. They just laid rock all over.
Yeah, it was crazy. But all right, so let's pivot a little bit because I feel like some of those things are just like not within our control. I mean,
Right.
I drive a Tesla, people. We're trying really hard
Yeah.
not to make it worse out there. But the other, well, I don't drive it, Mark does. But anyway, the other part that or questions that I get a lot around insurance is how do investors in the creative finance space avoid the due on sale clause after buying the property? And I've always just since I've started working with Chris, I'm like, you get an insurance agent that just does it all for you. Like that's how you do it.
Yeah.
I am trying to get better about letting Chris know when I'm about to buy a house, maybe like a week or two before I do,
Yeah.
so that we can start putting all like the things in place. Like I did it this time. I did it we just bought a house and
Yes.
it was supposed to close last Friday, but actually closed this past Monday. But yeah, I sent Chris the info. I'm like, hey, I'm going to buy this. This is a subto purchase. What do you need? And so there's some personal information that you actually have to get from the seller before you close while they're still motivated to contribute to the transaction. So like, little gem for you, get that information before you close. Because I swear after you close, the seller really just is like over it.
What is that information that you need to get from the seller?
Hey, Chris,
sure.
What's that information?
So you're right. You need someone that's going to be able to, that's comfortable with calling the lenders and make sure that they have the warm and fuzzies, that the asset is covered. And if there was an issue, that home would be replaced at where it is. When we collect the information on the sellers, it's because we have to be able to notify them. They have a line item of not ownership, because the deed on most of those transactions is has changed over, but there's a line item of liability, I guess.
They're still involved. Like you're married
involved
to them during that transaction for sure.
Correct. Yes, correct. So you have to be able to make sure that they are being notified, that they're also listed on the insurance contract, that the lender can visually see that they are there, and the new entity that owns that property or individual that owns that property is also, is the owner. They're the owner of the policy. So they have to be looked at as a player within that policy, so that the lender doesn't call on that, because they're looking for that. They're looking for that seller. They're looking for that debt holder.
Yep. They want to make sure that they're a part of that policy and that they're, can we just call it additionally insured? Is that what it's called?
Yes.
Okay. All right. I was like, remind me, because I just don't do it. I just send everything to Chris. I'm like, But there's some personal information. So what's the information you need?
So the information that I need, because if something were to happen, we have to be able to track them down. So not only do I want to be able to send them notices every year at renewal, like, hey, this policy is fine, everything, the asset is covered, you are listed in this position. So I collect name, address, and birth date. And if it's a husband wife that owns it, I need both of them, because both of them are owners. It's not one entity that owns that property. We have to send them both notification that there is insurance on this property, and the debt that they're holding is technically protected because that deed holder is continuing to pay that note.
Right. We want them to know and feel comfortable that we're actually being responsible owners on their behalf, really, because they're still involved.
Yeah.
Right. Yep. Yeah. And I'm sure it's weighing on them. If they were able to sell this property they would have done it. If they were able to do something different, they weren't. But that's what is great about what you guys are doing, is that you're taking people out of tough situations and giving them a chance to move forward in their lives instead of taking 4 steps back.
Right. And this is why I love when Chris is involved, because it gives them that assurance. Like, I even let him know who he is, like that he's my insurance guy.
Love that.
Like, things are going to get covered. And like why I'm asking for that information, because I want them to know that like my goal is to be a responsible owner, and then I'm going to take care of them.
Yeah.
So yeah, for sure.
Yep.
Very good. And like I said, the real hack at subtos or in wraps is to get an insurance agent that is well versed in those things. So like, because it is a little bit confusing, especially a wrap. Like when you have, I think you helped us maybe with the Buckeye deal. I don't remember, Chris, and this was it was over a year ago now, where we bought it subto, so we insured it, right? Because we want to make sure we insured it. And then we sold it on a wrap. And so that person needed insurance.
Right.
And so it can get convoluted.
Yeah.
Because we need to have the insurance that replaces the owner.
Wow.
And now the new owner on the wrap needs to be able to replace our insurance and have their own insurance on there.
Wow.
So it can get tricky.
And sometimes the premium is significantly different, because sometimes that person who's doing that wrap can't qualify with a normal lender. And so the attributes that they're bringing to the table changes that cost of that insurance policy completely, because we're no longer insuring an entity owning an asset. We're insuring an individual owning that asset. There's just different data.
Yeah, totally.
Wow.
And tell me if I'm wrong on this, Chris, but like, if we're taking over somebody else's mortgage, and obviously, maybe not obviously, in some cases it's pre-foreclosure, right? So they're behind on credit cards, they're behind on their mortgage, they're behind on their car insurance, their car payments. Will their attributes impact my quote on getting insurance on that asset? Because
won't.
they're the debt holder?
No, it won't at all.
Oh, okay.
Yeah, because you are now the deed holder, you have the only insurable interest in the policy.
Okay,
So,
cool.
So listing them on the policy where we do is just for a notification, so that we can show the lender, hey, these people are still in the game. But if they call my office and try to change the policy whatsoever, they have no right. They have no insurable interest to that actual policy, because you are now listed on the deed.
Yeah. Okay. Fantastic. That's good.
Nice.
I know that is something that weighs on people, especially me, because I was really under the impression that that's an impactful thing. So, okay, cool.
Yeah. Another thing that is super important when looking at homes is the age of the home.
Mm-hmm.
Right now, it's becoming very, very challenging to write any manufactured homes over 30 years. And in the state of Arizona, this really shouldn't be that big of a problem. Now, the biggest cause of loss in the state of Arizona is water. So, and most manufactured homes are completely run with PECs. So there are those issues with claims. However, a lot of these manufactured homes that are on the outskirts of towns, they've been purchased by people who are putting money back into their properties. They're updating those manufactured homes. Some of them are even covering them completely in stucco, and they look like frame-built homes. So but they're still becoming more increasingly hard to insure because of the age of that. And statistically, that home is potentially going to have more claims than one that was built in 2006, and so that's something else that investors should really look at. And if you have a relationship with an insurance agent, you should be able to say, hey, look, I'm looking at this policy or this property, I'm interested in potentially insuring it, can you run me a quick quote? And it should take 15-20 minutes, because at that point we don't need all the players. We're just trying to find a baseline quote of what this property is going to run you, so that you can kind of work out, hey, is this what I need? So
yeah. Well, actually, that's a great point. Okay, so what I heard you say, if you're going to be flipping manufactured homes or taking down a manufactured home, technically, if it was built older than 1994, ooh, 94. That's your year. That's your
Wow.
year.
Yeah.
So if they're as old as Steven, which by the way,
Yes.
his birthday was yesterday. So
Yep.
happy birthday to you.
Thank you.
I was going to
Thank
mention
you.
it.
I am 30 years old.
Yes, yes.
I would not
You're
be
so
insured if
lucky.
I was a
He's
manufactured.
just on the border of not
Yeah.
being able to insure. So so yeah, if it's a 94 or older, you're talking about maybe not being able to insure that asset. And I hadn't even thought about it because we actually do flip manufactured homes.
Yeah.
If it's on owned land, and if you guys have those kinds of deals, send it
Now,
our way.
with the flips, I do feel like it's a little bit different though too, because you're getting a different form of insurance. If you're getting a landlord type of policy because it's a rental that you're keeping, as opposed to getting hazard insurance, which is usually a form of a blanket, making sure that anybody that's working on the property, that essentially there's insurance if they hurt themselves.
I don't disagree with you on that. However, as we are very conservative underwriters, like if we had to keep a property, like that is something we'd have to keep in mind, right?
1,000%.
Yeah.
1,000%.
Yep.
For sure.
Most of the time that you're doing those flips, though, you're also improving that property.
Yes.
So there's a construction aspect of that flip that's built in there.
Oh, that's a good point. Yeah, because you'll ask like, how old is the roof? How's
Right.
the HVAC? You know, did you update the plumbing?
Right.
Yeah, that makes a lot of sense. Okay.
Right.
Well, when you are going to insure a manufactured home, what are some of the key things that folks out there need to bring to the table so that you can actually run a policy on it?
I mean, if there's a manufactured home on the outskirts of town, 90% of the time I'm making a stop. I'm getting in my truck and I'm driving out there. It gives me the best opportunity to build a case against the carrier telling me no, because I can have hands-on pictures of today. I can say, okay, this actually looks great. That Zillow picture that was 10 years ago is not the way that the property looks right now. Because when you put a policy in force, the underwriters are searching the internet. They are trying to find if there's anything in regards to that home or that property, that address, that would be an issue and may create more of a claim in the future. So
okay.
Certainly, pictures, providing pictures. If it's, let's say, if you have a property in Flag, if you are someone that is going to visit that property, take a bunch of pictures. Anything you think that is a problem, make sure you take a picture of it and discuss it with your insurance agent. I mean, your insurance agent is there as an advocate between you and the insurance company.
Yeah.
So they're there to help you understand the coverage that you're buying and what it will do with you in the event of a claim, which we're all hoping none of us have.
Right. Okay. And I know that as a flipper, like some of the things that I do need to take note of is it on owned land? That's like number one question. How old is the manufactured home? And then taking a picture of the placard that should come on every manufactured home.
Right.
What is that called? I don't remember right now.
Not the affidavit of a fixture.
No, the affidavit of a fixture is also important as a flipper because there was actually one that I was going to buy in the city of Maricopa, and it was like a killer deal. And then we found out that it was like built in like the 80s or the 90s. I can't remember right now, but they moved it in 2003. They moved it to the city of Maricopa, and because it had been moved, it's no longer financeable.
Yeah.
So affidavit of a fixture gives you that history of where did this essentially car where did this land and where was it affixed, so attached to land,
right.
And so it started out in Mesa and then came to Maricopa, and I'm like, oh man, we can't.
I guess that's another great question too, Chris, is that if you are in these situations, because I've had these come up before in the past where insurance was a pain in the butt because it was no longer considered real property. It was now personal property because it had been moved or it was on a leased lot. So it's technically a vehicle and you transact that at the DMV, not the title company.
Yeah. Okay.
Yeah. I mean, I have found that trying to insure a property right now that's over 30 years old is almost impossible, if not completely impossible. I haven't found someone that can do it. So it's really, really important to make sure that you are making the right decision, especially in a business sense. That is this going to make you, make you become profitable in this deal that you're doing?
Mm-hmm. Yeah. Well, there you go. It's kind of like an answer of like, I'm so sorry.
Yeah. Yeah.
SOL.
SOL, bro.
Yeah.
Yeah.
Yeah. Hey, that, we like to give it to you straight here. And that's why we like our experts to like give us what
Totally.
like it should look like.
Totally.
So anyway, I do want to pause for a moment. If you guys are on Instagram, please come out and join us over in YouTube. But also, if you are getting value from this, don't forget to like and subscribe
Mhm.
to either Stephen or mine's YouTube channel. So
Just do both. If you're already doing one, you might as well do both.
Right. I mean, we're a package deal, so just might as well. Might as well. But anywho, well, awesome, Chris. And what are from your experience, what is the number one thing that you're constantly chasing after, especially us investors, like trying to get the information you need before you actually get a quote out? Like what's the thing that like irks you? You're like, come on, Ingrid, just send me the blah blah blah.
A lot of times I kind of feel that it's the other way around. I'm not the fastest. I am over analyzing a lot of things when it comes to putting together an insurance quote. And so I do my searches online to make sure that if an underwriter is not going to catch me in a surprise or something, I want to make sure that I've got all my ducks in a row when I'm submitting this policy so that it looks clean. It is clean, and the business is going to be the property is going to be insured for that business.
Yeah.
Like you said, I'm patient, but those birthdays, the seller's address, the seller's birthday, that's really the information that I normally have to chase people for, because you just don't think about it.
Yeah.
I mean, the deal is done. The deal's done or almost done. They're really a non-entity. Technically or potentially, you're doing them a favor and getting them off the hook of having to make that payment and continue on with whatever they want to do that makes them happy. So that is really the information that I struggle with most. If there's a new build, that sometimes becomes challenging. Because I won't have any of the specs on the home. And if there's been a lot of updates, and so if I look at something online or and what you're telling me doesn't equate to what I'm seeing online, trying to get that inspection report or updated information so that I can make sure I am meeting the criteria to protect the asset, sometimes that takes a little longer.
If you're the one fixing up the house, first and foremost, to kind of put this in fix and flip terms, like let's say you're doing a BRRRR strategy. I do a lot of BRRRR strategy deals. I document every dime that was spent and what was done on that property. So when Chris asks me, hey, this house was built in 1954, I mean, was there any updates done? I'm like, yeah, we've done a ton of work. Everything's brand new in this property. And he goes, is there any way you can show me that everything is brand new in that property? And I can send him a list to show him $100,000 worth of renovations that were done and everything's broken down. That makes everybody's life easier.
Oh, yeah.
Absolutely. If there's ever something that's mentioned like, oh, the roof was updated, the HVAC was updated, you want to get all of that information from the sellers before you close that deal, because once you close the deal, the sellers are off doing what they want to be doing. They're not worried about what's going on with technically your property. So all of that information, any updates, anything that you can make that case stronger for that underwriter to want to approve that deal, you want to get that up front.
Okay, so Chris, nowadays affordability is a problem, right? People trying to find apartments for rent, houses for rent. Affordability is just a problem. We understand that. So one of the solutions that is out there now are these co-living houses. So Lauren, we love Lauren here on the Explain It podcast. So I know for a fact she's got a property out. Wait, I don't want to say where, because that's your business. Sorry, I won't say where, Lauren. Lauren has a co-living house though. Like, is American Family an insurance company that could provide a co-living policy? or have you been
Absolutely.
hearing about co-living? Yeah.
I certainly have been hearing about co-living, and there's different aspects of that. So co-living with your grandparents, that's easy. That's a layup type of a policy. However,
Mhm.
if you're taking a portion of your home that's separated off and you're renting it to a different person that's not related to you whatsoever, it's the type of policy that you're looking for is an owner occupied rental policy, which means that the owner is occupying the home. They are
Oh,
they,
hold on, Chris. I think you think I'm asking something that I'm not. So
okay,
let me give you an example. Okay.
sure.
So there is a company, we won't say their name, but they're prominent here in Arizona and I think in Georgia, maybe Vegas. But what they do is they help market to bring tenants to a property that has now been split off. So these properties, I may own it, but I don't live there. They were originally maybe 4-bedroom, 3-bath, and
Right.
now they're 8-bedroom, 3-bath because you've sectioned off parts of the property that you used to have communal space in. Like, let's say there was a living room. These houses, they don't have living rooms anymore. Now it's 2 bedrooms there instead. You had this extra family room, no longer there. Now it's a couple of more bedrooms.
Gotcha.
So
Think of like a group home. Like it's
yeah.
very similar to like a
It
group
would,
home.
yeah, it would be insured as a group home, and if they were all different people, I would hope that that landlord would put into the lease that they had to have their own renters insurance, so that it's protecting the asset that they're living in and the landlord that's holding that property. But yes,
Mhm.
you could write it as a group home. If it technically isn't a group home, then you would write it as a rental property, like an 8-unit rental property or a 4-unit rental property, because each of those rooms is some shared space. And
Mhm.
I don't know that American Family would have an appetite for that type of a policy. However, with American Family, what's great is we have a lot of brokerage options that we can go outside of American Family and shoot this out to other carriers, and usually we can find something.
Yeah.
Nice. Now, most of these situations too are going to be one master lease. So it's usually a company, like the company that's out here in Arizona, or even my property management company. We will do a master lease. So it's technically one tenant that then subleases out to other individuals. So would
Mhm.
that look more like a regular rental type of insurance at that point?
I mean, it would be on paper, it would be more like a regular rental.
Mhm.
The issue that you would have to kind of overcome is the extra people within the home that are subleasing. But technically, if we were doing like a college house,
That's actually a great example.
Mm-hmm.
uh, it really wouldn't be that different. So, I mean, I definitely would take that question to my underwriters and, the carriers that I work with, and kind of ask them what's best to protect my client, which would be you as the investor, in this type of a situation, and then figure it out from there.
Yeah. We even know a prominent investor here in Arizona. His name is Jamil Damji, and his goal is to condonize. Is that the right word?
Yeah.
Condonize
Condonize.
each of those rooms so that like the communal space is like the kitchen and the bathrooms that are shared, but you can own a room in those houses.
That's unique.
Isn't
Yeah,
that
that is.
crazy?
That's crazy to think
Yeah.
about.
And so I
Yeah.
was like, wow, I'm going to be watching this because like, what do the insurance companies do? And
Yeah.
I would assume it's like my luxury condo up in Sedona, right? Like the policy is actually cheaper because technically I don't own the land. You
Right.
only really own
HOA takes care of exterior and
yeah.
all that stuff.
Which then do you have an HOA now on a single house?
Could you
Because
create your own HOA on a single house?
yeah.
Ooh, this will get
Interesting.
my wheels spinning. I won't go to bed tonight.
Condominiums are, and HOAs, and they're all these habitational aspects of insurance are getting, um, it's a tough place to play in,
Mhm.
because the claims are so often. Um,
Mm.
so just take that in consideration when you're looking at doing something like this as well. I mean, of
Yeah.
course, it's not going to be a 6-building, 1,000-unit condo association. You're talking about a 6-8-bedroom single family home where each room is rented out. So it's a little different.
Yeah. Totally. But
I
when
think
he,
just having that open conversation with an insurance agent that you trust allows them to understand what you're trying to insure, and allows them to be able to present that information to their powers to be in order to make sure that the landlord's protected.
yeah, makes a whole lot of sense.
Love that.
Right.
Yeah.
Now, I'd love to ask some selfish personal questions as well here.
Be selfish. Go ahead.
we're
It was your birthday.
while we're
You
trying to
could be a
explain
little
it.
selfish. Yeah,
Good,
yeah.
good.
By the way, guys, he's 30. He's now in his new decade.
I think we said that before.
Yeah.
Oh, sorry. Just a reminder.
Yeah.
You're so lucky.
Oh my gosh.
I know, right?
Yeah.
Yeah.
It's all downhill.
To be 30 again.
Anyway. So for somebody that, let's say we've really started talking about, these are things to consider when you're buying properties. So giving a little bit more to the newbie investor, but what about those people that now have 5 properties, 6 properties? They're scaling up. Ingrid and I mentioned before that we own collectively between both of us over 30 properties. How else should you be protecting yourself? Do you need to have an umbrella policy to go along with everything? Do you need more insurance? Do you need just individual policies on each house? And what does that look like?
Honestly, at this point, the insurance industry is changing right now, and those larger condo associations that have multiple buildings, they are really getting hammered with rate. My advice would be, not only an insurance standpoint, but on a protection standpoint, would be to deed each of them differently in a different LLC and keep them all separate. If you have one master company and you have a claim on one of your properties and there's 20 properties under there, all of them are going to be impacted. Because you have one policy, so you'll have a claim under whatever your entity is called, 123 LLC, whatever. So you want to make sure make sure that you have every things separated moving forward, because at this point, insurers are really looking at those multi-unit, multi-investors. And I have a good amount of people that have 8, 9, 10 homes listed under one LLC. And I've had to have that conversation like, hey, we in the next year, depending on what changes within the industry, we may want to start separating these out.
Wow. I never even thought about that.
Not the answer I wanted.
No, downer. But that's the reality, kids. We're here to give it to you straight. Okay, but can we talk a little bit about umbrellas, though? I know we talked about Rihanna earlier, and she loves her umbrella, Ella. But
I like that. I like how you brought that back.
Yeah. Mm-hmm. So, Chris, what is an umbrella insurance? What the heck is, or umbrella policy? Like, what is that?
So an umbrella policy is excess liability that's attached to the entity that it's over. So you could have your 123 LLC. It could own a house. You have an umbrella over that. That umbrella is going to, if that liability is exhausted in the event of a claim, your umbrella would then kick in.
Got it. Okay.
Yep. Now, could you have it set up in a way? So let's say we do need 123 LLC times 20 of those LLCs now. Instead of getting let's say an umbrella policy on each and every single one of them, would you be able to do just the holding company that is holding all of those LLCs?
Not something I've done yet, but I don't see why it couldn't happen, as long as you had ABC LLC as the master company and then all the other LLCs underneath it. It's certainly something that I could talk to my underwriters about.
Yeah.
Yeah.
Okay.
Yeah, that's interesting.
Because I know I have an umbrella with you, but I'm like, I don't know what it covers.
Yeah.
He told me
you
need
hear
to
it
get
all the
one.
time.
I'm like, okay,
you need
I'll
this
take
umbrella
one.
policy, and I'm like,
I'll take one.
Well, you have a personal umbrella policy, which is super important for business owners.
Okay.
So a personal umbrella policy, like if you were to get into a car accident and they somehow found out that you were a business owner, that, if you could see the other person's lawyer's eyes, there's just going to be dollar signs, because, and that is one of the reasons why commercial insurance rates are just out of control, because every single commercial insurer usually insures their business at least $1 million. To do anything under $1 million is really unheard of. So when those lawyers are putting those lawsuits together, they're shooting for the moon. You know, $1 million, $5 million, and the payouts are much more. So certainly the personal umbrella protects you and your family personally. If they were involved in an accident with your personal vehicle, if there was a problem on the premise of your personal home, and that commercial umbrella and that personal, they're completely different. Completely.
Gotcha.
Wow. Yeah. Okay, guys, if you're a business owner out there,
Yeah.
and you actually have some assets, you should go and think about getting protect your family, man.
You have to.
Okay, so now
don't work so hard to let it all get taken away.
For sure.
Come on.
Oh my gosh. Okay. Now I know what I got. Oh gosh. What is one of the most frequent insurance questions you get, Chris?
I mean, the number one question everyone asks me is I have a 2019 Toyota Tacoma. How much is it going to cost me for an insurance? And there's just no possible way. Anything anyone tells you at that point, they're just lying to you. It takes all those questions to bring that rate to the table to know exactly what it's going to cost you for insurance, whether it's a vehicle, a manufactured home, a rental, your own personal home. So just giving that time to your insurance carrier and your insurance agent is important. Make sure you have a little bit of time that to invest to make sure you're getting the best rate.
Yeah.
That you're giving them all the information.
I love this. So tomorrow I'm actually running a webinar tomorrow with, we lost me, came back. Okay. Probably got a text.
Yeah.
Tomorrow we're doing this webinar in the subto community. It's called Don't Be a Lending Loser, which I also believe maybe we could do an insurance one where it's like, what are the typical documents you should have at the ready to be a professional investor, so that if you're asking for money, because technically insurance, you're asking for money too. It's just a different kind of way of asking for money.
Right.
And you actually have to pay for it, but whatever. Even a loan, you have to pay for a loan, right? Talking about like points and fees and whatnot. But how can you professionalize yourself more? And these frequent questions that will always be asked, you have to be ready for, like your date of birth, your social security number, your address, your how many assets do you have? How many kids? Like, do you smoke? Like, there's all these things that get asked of you.
EIN number. EIN number is a big one.
Yeah, for sure. So yeah, don't be an insurance loser. Get your stuff together and be ready to answer all these things that require some of your time investment.
Right.
Okay. I have another thing.
Yeah.
Okay. Somebody just taught me that if a weather event is named and you're in the middle of trying to buy a house where that weather event is named, your quote may become invalid. So the best thing for you to do when you're getting an insurance quote in the middle of buying something is get it bound. But what does that mean, Chris?
So, for example, we have that fire right now up in Pine. So over the weekend, we got the company emailed every single person that was licensed in the state of Arizona and let them know that there's a moratorium. So there is no more business that can be written at this time in that area. And so, yeah, if you were in the middle of a transaction and there was a moratorium on that insurance because of the wildfire that was happening, it's very possible that you'd have to wait until after that is all said and done in order to get that, in order to close. Now, to me, in my opinion, I would say don't bind the policy. Like, if you don't own the asset, you don't want to have any line of liability or anything to that property, because in theory, someone could come back and say, well, you have an insurance policy on this and this insurance company backed you, and we're going to file a claim. Not only did these people that owned the property are now selling it, they didn't have enough insurance, or they didn't have the right insurance. So we're going to come over to you, who has no insurable interest onto that policy and potentially file a claim. Now, would it go through? Probably not. It probably would be denied, but still there was a claim that was filed under you, and that will follow you. Even if you,
Wow. So it's a good counterpoint.
Even if you file a claim, and this is why it's so important to have a insurance agent that you trust and you can get to. Even if you file a claim and it's zeroed out. So let's say you file a claim and you're like, well, you didn't have, I don't know, water coverage, which is unheard of. But let's just say then, and you have a water issue and they deny the claim and they pay out zero. The computer still sees that you are more likely to file a claim than not. And it will count against you with every company.
Oh, wow.
So that's why I always tell my clients, like, if you have a claim or you have an issue in your home, let's talk about it. That's why I give people my cell phone, because I've shown up on people's homes on a Saturday and said, well, yeah, this is definitely something we need to file a claim. Or, you know what? I think we're okay here.
Yeah. So, here's my handyman.
Yeah,
let me help you out.
Exactly.
The cost of your deductible is not worth making this claim. And quite frankly, I've started writing everyone with $2,500 deductibles because it's just the impact that it makes at this point in time in the insurance industry and on the attributes to any carrier is enormous. It's just not worth making homeowners claims as often as I think people are used to. Plus, most insurers are not doing fixed deductibles anymore. At this point, I'm still able to write fixed deductibles, but a lot of carriers are going to percentage deductibles, and I really feel like they're misleading. Everyone throughout time has always had $1,000 deductible, but companies are writing policies with 3% deductibles, 5% deductibles.
Wait.
If
what
you
does
have
that mean, though?
if you have a $400,000 home and you have a $30,000 water claim because your tenant kid turned the tub on, walked away to play his video games, forgot, and then all of a sudden there's water running down the stairs. It's at least 30 grand, at least. And if you have a 3% deductible on a $400,000 home, you have to come out of pocket $12,000.
Wow.
Holy smokes.
I mean, percentage deductibles, I'm not a big fan of, because I want to make sure that if somebody calls me at 1 o'clock in the morning and then they say, hey, this is what's going on in my house, that I know that I've got them. Now, things are changing. There are certain portions of policies, especially in the commercial aspect, that they're making us sell percentage deductibles on wind and hail. Like, it's just what it is. And it's all because of the claims that each carrier has experienced in the last 3 years.
There's some scammy stuff going on with all the wind and hail. I mean, these companies were storm chasing, and it was they were
the
taking money.
Companies and stuff, But I will say, like, you and I walked downtown Houston. Beryl went through, which was their latest weather event, and these high rises in downtown Houston had boarded up windows. Wow. And it was kind of scary looking.
Yeah.
Like all across the city.
World War Z stuff.
Yeah.
Yep.
Yeah. So I can appreciate that was an expensive event, even though, like, for the most part, everybody was safe, but it caused so much damage.
People that take advantage of anything too, because the insurance companies, I'm sure, were spitting out the cash, so people were maximizing it. And it happens on the back end. We see this with rentals too. If somebody's house floods, the insurance company isn't just paying for the repairs that are happening in that house, they're also paying for them to go stay at a new place for the next year, 2 years at times, if the house burns down or there's a flood. And those houses aren't cheap. We love those tenants because they pay like $7,500 a month on a rental that should be $3,000.
Yeah.
It's crazy.
Yeah. Wow. Well, I also want to give a lot of kudos to Chris, because he doesn't just do real estate insurance and your car insurance stuff, but he also does business insurance.
Hey.
So I know, like, it's something that we've been able to take advantage of. So definitely, I know we're getting to the end, but we are going to have Chris back. What do you think?
Oh, definitely need to have Chris back. Yeah, Chris got us our policy for our office that we have leased out as well. I mean, you literally cover every bit of everything. You're the everything insurance guy.
Yeah.
We really try to write anything that we can get through the door, just because we know that people are interested in working with someone face to face. They want someone that they can rely on, someone that they can call, and that person's going to pick up the phone instead of dealing with a call center out of Venezuela or wherever. They just want to make sure that they have the ability to reach out and get the answers that they need at the time.
That's awesome.
Yeah, I appreciate that. That's for sure.
Mm-hmm.
Well, Chris, if people need to get a hold of you and want to bring you business or want to get a quote, where do they get a hold of you?
So the best way to reach out directly to me is my cell phone number, which is 520-610-3306. I also have an office out of Maricopa, Arizona, and my staff is well-versed in subto, and that phone number is 520-350-2500. And of course, ChrisCahallagency.com. You can get all of that information as well, my address and email address and all that.
Awesome.
That's great.
And by the way, congratulations to your boys who were just what do you say, knighted with Eagle Scout.
Oh, that's awesome.
Is it
Yes.
knighted? I don't know. I don't know the scout talk.
I never got there.
No.
So.
Yep. They just earned it it was 14 years of scouting. Great time. They learned a lot. Always, in my opinion, scouts is where you learn the things that you don't learn in school, home, or church, and gives you that other aspect of how to navigate life.
Yeah, absolutely. But congratulations to you and Jocelyn too, because that is a freaking commitment to have to take them to scouts every week and underwater basket weave, whatever, all the things that you're learning. So.
Yeah, I have one kid now and she goes to school, and that's tough for me to make sure we're on time and
yeah.
And that affects my schedule. So that's wildly impressive.
Right on.
Thank you so much for having me on. It's always a joy to speak with you both. I'd come back on anytime that that permits. And certainly another aspect that you should probably cover is trusts in the future.
Ooh.
Within our discussion here, I thought it would be really good to have a lawyer here that can speak in regards to protections, personal protections. We were talking about umbrella policies, personal protections, to make sure that you have that separation between you, your family, what's most important to you, and your business.
Yeah, absolutely.
Love that.
Thank you. All right, guys. So with that, we really appreciate you being here. We hope you got a lot of value. Let us know what other expert you'd like to have on the podcast so that they can explain it to you and us, because I feel like I learned a whole new stuff about insurance, and I was like, oh, this is going to be an easy one. Yeah. We know what
we do this.
And nope, learn new things every single time.
Yeah, we're learning with you guys. Don't forget to like, comment, and subscribe. Subscribe to me and Ingryd's channels both. Chris Cahall said that he will be creating his own YouTube channel as well, so you can subscribe to that one. But without further ado, thank you, Chris, so much for being on the show. We're so grateful to having you. We can't wait to have you back again.
Yeah, and thank you. We'll catch you guys next week.